What's going on, everybody? It's Jeff here. Welcome back to the channel. Market opening strong, only to bounce right into resistance, sell off, and completely erase all of the gains going back to Friday. There's a couple very important things I want to share with everybody. This not only affects the short term, what some of the events are for the rest of the week, and obviously CPI getting released next week, but also a bigger picture. A lot of people are missing this, and I also want to share some of my thoughts, especially after everything I read on Twitter as of yesterday, just the complete sentiment. It is going to help you for the next 3 to 4 months, if not longer. And if you continue to plan and prepare for when we eventually do reach a bottom, you are going to make a lot of money. So stay patient, listen to this. I'm going to cover everything. Let's get right into it. First off, as you can see today, completely broke out from that channel we started to form. The longer the channel, the bigger the breakout. Okay, this is not a very long channel between that 387.50 and 392 area. I had, expressed that to everybody inside the group. Going back to May 27th to about June 9th, we had a very big channel. Once CPI came in hot, obviously we saw a huge move to the downside. But somebody had posted inside the group, and I saw a couple people on Twitter just asking, what are the reasons for the sell-offs today? And I want to cover a couple things. So first off, we did have consumer sentiment come in. All right, it is a 16-month low. Okay, however, one, it wasn't really that bad. Two, it's been expected. It's been consistent for pretty much 16 months because of everything that has been happening. All right, the market is looking for any excuse to be able to move in either direction. All right, I said in last week's video that the move that we were making to the upside, in my opinion, was nothing just to build liquidity. Markets cannot move in one direction. In order to continue the sell-off, there has to be liquidity in order for funds, institutions, and retail to be able to exit their positions. That is why it is very well known in bear markets, in bearish trends, bearish downtrends, the rallies are great. And that's exactly what we saw. We saw about an 8.5% rally from the low. All right, let me switch my drawing tool over here, and I can show you from that low of about 362.17 to where we hit this morning was about 8.5%, which is a good move, especially over a short period of time. And it's a perfect opportunity to grab more liquidity. Now, yesterday on Twitter, it was really ironic just to see the sentiment. Okay. And I want to bring this up because it's very important. And I see this happening just too much. People continue to switch their sides every few days. And it's literally after the move has already been made. Okay. So they're not bullish down at 360. They're bullish when it closes, that first gap, although it's hitting at that resistance. Then they're bullish after the move has already been made. Right. And they don't become bearish until we break all-time lows again when the market is well overdue for a rally. All right. And that's something that I got caught up in a little bit early on when it comes to trading, of always just switching and feeling out what the sentiment was, whether it was, on social media or just, from Main Street media themselves. And it really gets people caught up. But there's a couple of things I want to just mention. The macros haven't changed. Okay, inflation is still running rampant. Jerome Powell has stated that raising interest rates is not going to lower the cost of gas, and food. He admitted that in front of the Senate Banking Committee. All right, we've got a lot of things happening from the federal government standpoint, the Federal Reserve, the economy, the labor market. Nothing has changed. And when you start to look at some of these charts and you start to see some of the sentiment and see some of the moving and see some of these are beginning to bottom out and it's already been low, but what is low can already go lower. You need to take just a step back. And I'm also saying this as a reminder to myself, but take a step back and think, has the big picture changed? Okay. Have we reached official peak of inflation, which is 2 or 3 months, okay, of declining numbers? All right. Second quarter GDP, the first estimate comes out the end of July. Now, tomorrow is just the final numbers for quarter one, all right, meaning that it's not going to initiate an official recession, which is classified or defined as 2 negative growth quarters back to back. All right, so that comes in at the end of July. We're still a complete month away. So from a macro perspective, nothing has changed. There's no indication for anybody, okay, to think that the market has bottomed yet. all right, or this rally is just going to continue going higher and higher. If you jump into these charts, I'll zoom out for you. You jump into these charts and you start to, map these out. How far have they gone? Okay, this one's gone 10.6%. That this one went about. Well, let me click here. This one went about 9.5%. You begin to see some of these patterns of how much it moves. When you see, the market is just completely overextended, it's due for a little bit of a bounce, a relief rally, which is very common inside bear markets, which exactly what happened. But to see that, people are like, we're bullish. We're going to get to, the QQQ is going to get to, almost 320 within the next 2 weeks. I saw 420 on SPY, and you're thinking to yourself, what's going to make a move from 360 all the way up to 420 when the bigger picture hasn't changed? All of this move has been done on declining volume. You see green moving up and a declining volume coming down. This is not going to be sustainable. So my point behind all of this is, one, until the macros change, until the big picture change, the trend stays intact. Play the chart, play the channel if it continues to move. If you're looking to build some very, bigger long-term positions, your high growth is a little bit more attractive now because they've gotten to a valuation that is just so low, all right, and they don't really pop with the entire market overall with the SPY or QQQs, that they can be a little bit more enticing. Now, there are some speculative companies, okay, that had reached some astronomical highs, Peloton, just to name one of them, that I don't think is going to get back to that. However, that is something that you can slowly dollar cost average into. But my point behind all of this is be careful on the sentiment that you hear. I don't only see this on Twitter, I see it on clickbait, on YouTube videos and so forth. And I try my best not to do it, but I'm sure I'm probably guilty of writing a title that doesn't explain 100% to the fullest. I only have so many letters and characters to be able to do that. But the point behind all this is, like I said, just be careful on the sentiment that you hear. All right, if people are talking about one move but nothing has changed, there's no validation or confirmation or any conviction to yourself that I believe that you should have in order for that to move higher. The next thing I do want to point out, is market makers will always have in their best interest to be able to, play the side that is least crowded. Okay, I don't want to necessarily say screw over the most people, but sometimes that's what it can be. And when you find when everybody is just YOLOing into puts, it's a very good opportunity for the market to rip to the upside, okay? And it's the same thing when everybody's starting to switch over to calls. They're getting out of the puts. They're closing their positions. It's the same exact way. And you can follow that by checking this out. Go ahead and Google CBOE, equity put call ratio. It comes out every single day. You can see some of these numbers. And if you go back and chart it out a little bit, and it's not to an exact science, but if you just spend a little bit of time and charting out how the market moves when you're seeing some of these numbers at highs and lows, it's going to give you a better understanding of where to be able to position yourself. So guys, that is it for this video. I'll see you in the next one.